Good afternoon, everyone, and thank you for joining us for Genscape's 2016 Summer CAISO WEC Outlook, Renewable Generation versus Thermal, and its growing displacement in California. To begin, just want to encourage everybody to go ahead and at any time feel free to enter a question in the queue, and we will answer that coming up at the end of the presentation. I'm joined by my colleague David Quinn, and in case I didn't mention it, my name is Ross Fessman. We're both analysts here on Genscape's CAISO desk. Taking a quick overview on the topics that we'll be covering in today's presentation. To begin, we'll start with demand, which will include a review of spring 2016, what we got right, what we got wrong. We'll then move into our summer expectations, including temperature and precipitation, as well as hydro and drought outlook. We'll then move into supply, where we'll cover, again, expectations and forecasts for hydro generation as well as solar. I'll then pass it off to Dave, who will discuss Aliso Canyon, both impacts and expectations. Following supply, we'll cover pricing and congestion, which will include a look at pricing expectations moving forward, and a historical look at congestion and what we expect going forward relative to previous summers. And at the end of the presentation, we'll have plenty of time to address any questions that everyone may have. So beginning in demand, we'll start with a review here of spring 2016. To begin, we did get forecast load coming in line with our expectations, and it was close to, if not slightly weaker than spring of 2015. There are still a few days left in the spring climatology here. We also saw our high case verify with regards to California hydro expectations, as we did see greater precipitation fall in the Sierra Nevadas. As far as hourly average hydro generation in California, since March 1st, we've been averaging just over 3.3 gigs. As a result of increased hydro generation, as well as higher wind generation, thanks to an active pattern set up by El Nino, and stronger imports into California, we did see thermal generation come in weaker than not only our expectations, but any other spring in the last 4 years. On the transmission side of things, we did see an April past 15 D rate that was unplanned, lasting for the majority of the month. The combination of less thermal generation as well as Aliso Canyon concerns offset one another, leading to fairly neutral gas impacts. Lastly, Northwest imports did come in much stronger than expected, partly due to lack of significant D rates on Paki and Nom. Turning our attention towards the upcoming summer, this is Genscape's official Western temperature and precipitation forecast. A couple of points to note here. Main drivers are the developing La Nina that we're seeing after one of the strongest El Ninos on record, as well as a positive phase of the Pacific Decadal Oscillation. We do see warmer risks associated with this ongoing drought as well that could lead to some upside to our current temperature forecast. For the most part, though, you'll notice that in the western footprint, you'll see near normal conditions in terms of both temperature and precip, with the exception of the northern tier, where you can expect slightly above normal temperatures and slightly below normal precip. Taking a month-by-month look at temperature expectations, you'll see very similar expectations for June and July in the Pacific Northwest. The only exception that changes really is looking at July interior areas of the West and California can expect to see slightly below normal temperatures. And moving into August, you'll notice a bit of an expansion of the above normal temperature expectations throughout a bigger chunk of the West. Moving into precipitation, June and July, we're expecting widespread normal precipitation expectations, and August, for the most part, stays the same with the exception of the extreme northern areas of WEC. In comparison, the Climate Prediction Center has the expectation that really the western half of the WEC footprint has a 50% chance of exceeding normal temperature expectations. And this could be driven by their expectation that with the positive phase of the PDO, we can expect to see warmer waters in the eastern Pacific and therefore stronger ridging over the western areas of our footprint. So taking a look at where the drought stands most recently and how it compares to last year at this time, you'll notice a sizable decrease in areas covered in drought. Almost twice as much of the western footprint is drought-free as compared to this time last year. Another big change comes in California, where some of the extreme to exceptional drought has diminished, especially in northern sections of the state that were hardest hit by El Nino precipitation. Additionally, extreme in the state of California overall has been cut in half, down from 46% this time last year to 21% in the most recent drought update. Climate Prediction Center's Drought Outlook falls very much in line with our expectations as we are moving into a drier part of the year. They are forecasting an emergence of drought in the Pacific Northwest. So some of the gains that were made over the winter months and spring do look to be lost heading into this coming summer in the Pacific Northwest. And as has been the case for many summers, we do see the persistence and intensification expected for drought in the state of California. We'll now turn our attention towards supply and begin by taking a look at California hydro generation expectations. The solid black line reflects actual generation since the start of 2016. As you can see, dating back to February, we have been exceeding the 2011 to 2015 average. This is, in fact, the highest three-month spring average since 2011, which is the strongest line plotted on the plot. We do forecast these conditions to remain in place moving forward through the summer as we expect hydro generation to remain above the 2011 to 2015 average. And as we move into the fall, we expect a bit of convergence between hydro generation this year and what we've seen from 2011 to 2015. The hatched area reflects the sensitivity, and the low case to this we see coming through in the event that the positive Pacific decadal oscillation drives a stronger and more eastward placement of summer ridging, yielding stronger temperatures and drier conditions overall. The high case we would see developing in the event that the La Nina scenario playing out heading into the fall influences greater precip through the summer months with near neutral to weak La Nina conditions in place. Moving into BPA monthly hydro, this spring we did see warming and drier than normal conditions translate into an earlier than normal peak coming in the month of April. So later than last year's peak, but still earlier than a typical hydro year. We do expect a brief rebound in hydro generation relative to the month of May, as we anticipate that filling reservoirs and some of the remaining snowpack will briefly yield higher generation in June before beginning the decline that begins in the month of July and lasts right through the month of October. As you can see, once we get through June, there is a bit of convergence, and our forecast falls closely in line with the 2011 to 2015 average. The low case scenario is once again driven by enhanced ridging associated with a positive phase of the PDO. Our high case scenario is also associated with La Nina, similar to what was driving the high case in California hydro generation, which would drive closer to normal precipitation for Pacific Northwest. In terms of solar generation, taking a look at spring 2016, every single hour relative to spring of 2015 saw at least a 20% increase, even the midday hours associated with peak solar generation. 4 primary solar projects were coming online during the spring months: Silver State South, Desert State Line, Bracker Solar, which is phase 1 of the larger Blythe Solar project, and McCoy Solar. Currently, after this spring, our hourly solar record stands at 7.7 gigs roughly, and that was set on May 11, 2016. Our current solar capacity heading into the summer falls at about 7,950 megawatts, and as those units continue to come online, we do believe that that capacity will grow to above 8 gigawatts at some point here in the early summer months. Turning your attention to the topmost line on the plot showing summer of 2016 expectations, we do expect the average summer peak to fall just above 7.2 gigawatts. Now breaking out a little bit more of the supply side of things and how they compare to previous years. We've already touched a bit on solar, but in terms of gigawatt hours, you can still see the nearly linear increase year over year from summer of 2012 forward. We expect that pattern to continue, as you can see by our estimate for solar to exceed 6,000 gigawatt hours from the June through August timeframe. Thanks to a strong El Nino and increased precip in California, we are in a healthy hydro situation, unlike what we've seen for the last several years. And going forward, you'll see that summer hydro generation is expected to be the highest since before 2012. In terms of non-gas generation gigawatt hours on the whole, you'll notice that we are projecting a considerable increase relative to previous years, again, thanks to a healthy hydro situation and continued solar build relative to previous years. The effect that all of these things have on the thermal stack results in a discernible decrease in expected thermal generation heading into the 2016 summer season. Now taking a look at our load expectations compared to supply side. Again, reiterating, increases in hydro and solar are going to lead to the displacement of thermal generation, which we expect to result in the lowest thermal of the previous 4 years. We also are expecting load to decrease after 3 straight years of California seeing top 10 warmth. 2013 was the 6th warmest summer on record, 2014 was the 3rd, and last year was the 2nd warmest on record. So in spite of increasing temperatures, we have been seeing load decrease. For 2015, you'll notice that there was that spike in California thermal generation associated with the rather dire hydro situation and a scarcity of Northwest imports. We do think that both of those will change, ultimately resulting in, again, large thermal generation displacement. and continued decrease in real-time load for the summer. And with that, I'm going to pass over to my colleague Dave, who will begin by talking about the Aliso Canyon situation.
Thank you very much, Ross. As we begin looking at Aliso Canyon, we just provide a little bit of background on what's been going on. The leak was discovered last October. This is a rather big deal because Aliso Canyon represents 63% of all natural gas storage in the LA Basin area. And currently, because there's a moratorium on injection, the well is only at a fifth of its total capacity, which is 15 billion cubic feet of gas. Also of note, the core customers or homes or residential take priority over the local distribution system. Next, we go into why this is such a big concern for the ISO. Two words keep coming up with the ISO in reference to Aliso Canyon. Those words are flexibility and deviations. Flexibility comes into play in two different ways. One, they would like to be flexible to ramp up gas units when there are large swings in renewable generation, for example, when solar drops out of step. Two, they want to be flexible when there are poor load forecasts and when those load forecasts go bad if they need more gas-fired generation. Deviations come into play during outages. Unplanned outages could cause the possibility that they would need to pull more gas from this area. So that is the big concern for the ISO and why they're currently in the midst of a FERC filing to deal with the issue. This slide here shows us the area and units affected by Aliso Canyon. As you'll see, there are 17 LA Basin units, 11 in CAISO and 6 in LA DWP. Genscape is monitoring about a little under 50% of the capacity in the area, with the units Alamitos, Redondo Beach, El Segundo, Huntington Beach, and Valley all monitored on our Power RT system. Getting into that FERC filing I mentioned that the ISO has put in, there are a few things they're trying to accomplish with the filing. First, they would like supply scheduling coordinators with advisory committee scheduled 2 days out to help with gas procurement decisions. Next, they would like to increase the gas commodity price affecting the overall energy bids that would ensure they will only be dispatched for local needs. And then big topic of conversation is possible gas availability constraints that they could input. Basically, this is to limit the maximum amount of gas generation from being displaced in a given area, and the real goal is to minimize the variation between day-ahead and real-time markets so they don't have to react quickly and call on a gas unit. They'd also like to increase their own authority to reserve internal transmission capacity by adjusting constraint enforcements and ensuring that the dispatch of resources in SoCal recognizes gas limitations. Finally, we get to our take, which is done in collaboration with our Nat Gas team in Boulder. Overall, we think that the SoCal summer strip is overpriced on fears that Aliso Canyon outage will create lots of gas shortages for a few reasons. One, gas demand has shown no structural weather normalized increases in recent years. There appears to be sufficient capacity for imports to meet gas demand needs currently. And generation from non-gas fired sources continues growing. As we talk about, solar continues to grow, other renewables are growing as well. And there are also concerns regarding the availability of Aliso Canyon. We believe that those concerns are overstated. Finally, from Sempra SoCal Q1 2016 earnings call, where they reaffirmed that they believe they'll be able to resume injections at the end of the summer, They also reaffirmed that they can withdraw from the 15 billion cubic feet that remains in ALISO, although that is supposed to happen on a somewhat emergency-only basis. But overall, we believe that the Aliso Canyon impacts are overblown. Next, we move on into pricing and congestion, and first take a look at the top 10 summer constraints in the day-ahead market from the past 4 years. Couple things to point out here. As you'll notice by the region in which a lot of this congestion occurs, a lot of it is in the Fresno area. Almost all of that is due to the lack of hydro in the last 2 years from 2014 and 15. You'll notice that those 2 years pop up much more than 2012 and 2013 in this graph. And we do think that with hydro returning to normal levels, we won't see a lot of this congestion. There is an exception in this graph with the 6110 table bound bake flow constraint. We do believe that similar congestion to this could pick up over the summer because increases in hydro exacerbates that constraint. Moving on to a historical look at day-ahead and real-time or FMM congestion just by absolute value of all the shadow prices in the past 5 summers. As we mentioned in the last graph, 2014 and 15 saw the highest levels of congestion, and that was because of the lack of hydro. Also of note here, real-time or FMM congestion has, the shadow prices have been greater than the total shadow price in the day-ahead market every year except in 2011 when they were about the same levels. And as I mentioned in the last slide, we do expect the overall level of congestion to go back down from 2014 and 15. This graph breaks out the marginal cost of congestion by month in each of the 3 load zones and 3 hubs in California. Couple things to note with these graphs. You'll notice that ZP consistently sees negative congestion across all 5 years and across all 3 months. We believe that that will continue because that's going to be affected by growth of solar generation in the area. As you'll see in the, mostly in the July graph, also some in the June graph, the 2014 and 15 real-time FMM spikes in PG&E are from that aforementioned Fresno area congestion, which we expect to be weaker this summer. The last point of note is the biggest spike here is in San Diego in August 2012. That was from an Sycamore Canyon, Carlson Hills hitting especially hard that month. As we finish up with congestion and get into our final summary, these slides show where we stand in SP in particular across June, July, and August, and whether or not we think it should be a buy or a sell based on where the market currently is and based on these 5 factors, which we've attributed bear or bullish to. The bear in bullish refers to how that factor impacts the price. So as you'll see, across all 3 months, we are sell. We are weak sell in June, partially because the price is currently so much lower than it is in July and August. But overall, we're sell across all 3 months due to the fact that we are bearish load generation and imports for the whole summer. Finally, we move into a similar slide on MidSEA across all 3 months of the summer. In June, we are currently neutral, same in August. We are bullish on load, but we're bearish imports and neutral or slightly bullish across the other 3 main factors. That's why we're seeing we're overall neutral where June MidSEA is trading right now. The one buy we do have is in July. At 2678, we think with our bullish forecast on load in the Northwest and our slightly bullish signal on generation, we do think that that could be a decent buy. As we go back to being neutral on generation levels in August, MidSEA, we think that where the market is correct. That is the end of our presentation. Please don't forget that if you have any questions to submit them in the box, and we'll get back to you as soon as possible.
So we have a question here with regards to reducing load in California.
So I do think that a couple of the factors impacting load decrease in California are efficiency projects as well as residential solar increasing over the last several years.
So there's a question here about the fact that we see thermal generation being lower in California, but we are bullish gas for Q3. And the entire reason for that Q3 bullish gas has to do with our expectations for the market to continue to price in the Aliso Canyon risk, even though we don't think it's a big risk and that it won't affect availability and generation in Southern California all that much. That doesn't mean that the market will continue to, or won't continue to start pricing in that SCE gas price higher than PG&E gas or higher than it would otherwise be. So we have another question here about why are we different than the Climate Prediction Center that's saying that it's actually going to be warmer across the West Coast than what we're saying?
So to answer that, we do see a positive phase Pacific Decadal Oscillation in place, and with that, you do see risks for ridging in the West. We think the combination of the Pacific Decadal Oscillation in its current positive phase and the transition to La Nina compared to previous analog years where these conditions were present, we think the Climate Prediction Center is a bit overblown on their estimates for widespread above normal temperatures in the West through the summer months. All right, that concludes our presentation for today. Thank you all for joining and listening in. We appreciate your questions, and any that we were unable to answer, we will be sure and respond to via email in the coming days. Thank you.